Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Now let's take a look at the gold market. In general, in the gold market, the situation is almost the same as in the euro currency and other dollar-related currencies. After the first leg up, market stands in the retracement, and now is approaching to the significant intraday support area that we should use and we will use for understanding whether we could get another upward leg to the upside, whether it will be compounded ABCD retracement, or market will fail here and just will continue move lower. In general, guys, as we have estimated in our weekly research, this upward action is mostly speculative and technical, since it is not supported by real money. So we do not see any changes in the CFTC report sentiment shift, and we do not see any inflow or in the SPDR fund. So it means that institutional investors stand aside and they do not put the money in the current upward action. And sooner or later it means that this upward action will be doomed. And maybe this will happen even on the current week, especially if we will get the nice employment numbers on the ADP report and the non-farm payrolls report, and particularly if we will get the growth in the wage cost. That's very important. So now we will be watching what will happen here. Some of you, if you would like, you could try to take long position here, but be really extra careful, since upward action is really fragile, and this trade will demand a lot of discipline from you, because you will be really staff work will be with the stop moving and tracking what is going on the gold market. Also, guys, I would say that our Kibi trade that we have discussed on the previous week and we have started here, it's almost has been completed. So despite where we will take the profit here, or you will wait a bit more, that will be probably a positive result. So most important for us, for our time frame chart. So here, guys, our downward action right after the completing of the ABCD's 1618 target, accompanied by the daily overbought. That was in fact the context for the Kibi trade. Here, guys, was entry point on the trade retracement of the first move down, and the trend for shift bullish on the hourly chart. And right now we have this lightning bolt ABCD in progress. So it's barely, we could call it the ABCD, since you can see the BC leg is really anemic. Almost we could say that this probably even just straight move down. But anyway, if we will use some kind of the ABCD pattern, but the target of this pattern stands not quite in the combination of the confluence support, but slightly lower, mostly in agreement with the next FIB support areas, 1172, 1175, and take a look, this coincides with this top. So following the gold's habit, it's a really nice probability that market will hit this target and retest this former top that gold likes to do. At the same time, you can see that the level stands very close, and in fact this is some sort of the support cluster. First is confluence support, this is weekly pivot support fund, later below this is the agreement with the major 618 support, and that's why this area will clarify, does gold really have the intention to continue move higher. So market should hold above this area, somewhere above 1172, to prove us that we could count on A, B, C bottom, D retracement. If market will fail here, that probably will open road right to the lows and even to the next and our destination former 1130 level. How we could deal this? So I just explained the possible tactic how to trade such setups in the euro currency. So guys, since this is significant support and we today will not have any significant numbers, it not bad chances that market could show some at least minor respect of this support area. And if you will decide trying to take the long position here, it's better to do it somewhere from this area. I think that's at my taste, this is most preferable area for taking the long position. But the major point in this trading is the moving of the stop. As soon as market will start to respect this area after the first bounce, it will not mean that market will reverse stop and continue move higher. That could be just the technical respect of this support. When this will happen, move your stop to the break even. That's the crucial point in the trading setup, because this action is very fragile. So barely we could rely on it based on the data that we get from the commitment of traders report, because the normal market mechanics suggest that as soon as market will bounce out from this area, and if market was really bullish, it should not return right back down. That's the core of this setup. If this will happen, market will return right back down. This probably will mean that market will continue move lower. That's why it's a crucial point. If you will decide to take the long position here, move your stop to the break even if market will show the respect of this support. That will save a lot of your money. You could also be even more conservative and watch for reversal pattern. So drop your time frame chart to the 30-minute chart, to the 15-minute chart. If you will find any reversal pattern, that will be much better, because in this case you will understand where to place initial stop. For example, if it will be butterfly, you could place it below the 1618 extension of the butterfly. If it will be free drive, it's the same. So you could you could place the stop below the reversal point of the free drive. So you guys already know this. Just do not miss this moment to move stop to the break even as soon as market will show the respect of this support. And that will demand a lot of discipline for you. So that's in fact all that we could say. Probably the major activity will come on the non-farm payrolls release on the GDP report. Until this moment, market will expect and wait what will happen. Reuters poll shows that investors expect to get 245,000. That's the market expectation on the non-farm payrolls. Well, so let's see what will happen around this strong support on the bull market.